What's going on, everyone? Welcome back for another episode here of Let It Grow Investing. I'm Jeff. We're going to get everything covered that you need to know about in the market and try to get everyone up to speed. So thank you very much for stopping by. Yeah, man, we got a lot to cover. I was not here last week, so we're going to double down on this one and try to see what we can't get you guys in the know about, right? So busy week last week. We had SpaceX IPOs. We're looking at Anthropic. We're looking at OpenAI. Google's been, kind of buying a little bit of both of those, which I didn't realize how much exposure I had to SpaceX. I think Google owns about 4.5%, and Anthropic, I think they own more like 10%. So I guess that makes me a wise investor because I've been buying those or buying Google when they were buying the other ones that are now pretty all right. So we're going to see just what the future holds for both of those. Is Google a buy? Should we be adding more? Do I have enough exposure? What do we want to do with SpaceX? How are we looking on Micron? Do we want to buy Adobe? Should we be buying Marvell? Jensen Huang says it's the next $1 trillion company, or it's going to be $1 trillion company. And it's got a decent runway to go in order to get there. So a lot of different things we're looking at, a lot of different things that are on my mind. I've been trying to play these options on Micron. I've been talking about that for a while. The volatility is definitely there. And that makes those options worth a lot of money when you're trading them, right? So it can take a look at that a little bit. I'll get into what I did this past week, buying or selling my shares as a covered call, probably around that 50 mark. The shares were down in the $1,000 range. Let's go ahead and pull it up. It's easier to talk about when we're all looking at the same thing. So we're just going to dive right in here. So as I'm pulling up MU in the background here, we are going to go ahead and share this one, and we're going to see just what's going on with Micron, ticker MU. And this is where we're at. And I had a covered call written at 11:45, I believe it was. And then end of day on Thursday, which I kind of forgot we were off on Friday for Juneteenth here in the U.S. And also the U.S. national soccer team World Cup game. It wasn't a holiday for that, but it should have been, let's be honest. At least, the 40-some people that were at my house thought that it should have been. But anyhow, we got Micron, right? So I was looking at this one. I was hoping that it didn't go above 11:45. And it was probably about here when I was like, oh man, this is not good. I got to close this position because it just kept running, right? It started the day in the 1090 range. And then it got up to where I was getting nervous about this covered call, which meant that I would have been selling 100 shares at $1,145. And I didn't want to have that. I want to hold on to the shares because I think they're going higher. That is my long-term 3 to 5 year analysis on Micron, is that it's going to continue to go higher. So you see a little bit of upside here, but this is so volatile right now, and it's in this like trading channel. But we also have earnings this week, which is going to just distract everyone from the long-term plan, right? I think we're probably going to get a solid quarter. We're probably going to get a raise in guidance. And I have a feeling that the stock might go down. So I want to talk about what I'm going to do with that as well. But we are getting some people coming out and saying, hey, this thing could go to 1,700. We're seeing a lot of these price points saying, yeah, 1,500, 1,200, 1,500, 1,300. We're looking at all these analysts. I don't know that any of them know exactly where it's going. They're just kind of following the trend, right? We've taken a look at this before as to what the analysts are looking at, what the earnings are looking at, and really what to expect from here. So there's a lot of pricing power that Micron has, right? There is so much demand for these chips, all the semiconductors, and the fact that they were a commodity chip maker and now everyone needs what they sell is so much pricing power for them. It's incredible. So that is definitely the thing that is driving this thing. If we look at it from last July, and we were, let me see if I can get a price point here. We were it just keeps disappearing on me right when I pull up I want to say it was 120-ish, 150-ish, whatever it is, it was much, much lower. So we have all this volatility from not really expecting this thing to break out, but now everyone's realizing that this stock is super, high demand, pricing power. They can't get enough of them out the door quick enough, right? Even I believe Nvidia was saying that they have pricing concerns, and one of their suppliers was raising their prices 20, 30, 40%. And they all kind of shrugged it off because everyone knows that Nvidia and AMD and Micron and SanDisk, they all have pricing power. So even if they have to pass on that cost to the customer, it's not going to stop sales. So the fact that they have that much pricing power, the fact that 40% cost can be absorbed, and it's just not going to slow the freight train down, not one bit, is insane. It might hurt some other people's bottom line. It might hurt a Google, it might hurt some of these other companies that have to spend so much more without having extra revenue coming in right away. But someone like an AMD or an Nvidia that gets that revenue right off the jump, or Micron in this case, we're seeing that right now. We don't have to wait 3 years or 12 quarters to get that news report that says, oh yeah, that extra 40% that we were paying 3 years ago, yeah, finally paid off, right? So Micron is banking on that now. So I wanted to talk about what I might do if this thing comes out on the 24th and has a beat and raise, right? That is something I'm looking at. So I'm thinking my covered call, I could potentially write it tomorrow at, say, maybe 10% higher than here. So another $105 higher, right? So maybe I'm looking at like the 1250 calls or 1260-ish calls, 1 week out, 2 weeks out, whatever that might be. That is where I'm looking to get that kind of covered call written. Now, if it does drop, if we do get a beat and raise and the quarter does drop like we've seen before, I will share this one. And this is just right on Gemini, right? Historically triggers highly volatile short-term sell the news pullbacks immediately following blowout beat and raise quarters, which are then typically absorbed by massive mid to long-term upward rallies. This is just par for the course. So if this thing, we see one piece of news that says, oh, Micron beat and raise, we were expecting, 42 billion and it came in at 41.99 billion. Someone's going to say, oh, they missed it, right? But they were still in that trading range, whatever those numbers are. I am looking to buy a longer term call option, maybe not even a longer term, but I want to buy some call options that say if it drops down to, say, 1,020, or if it drops back down into the nines as we've seen it do recently, I can go ahead and write that covered call for maybe $30 more. Maybe if it drops down to 950, I'm looking at the 980 calls. If it drops down to 1,020, I'm looking at the 1,050 calls. Say it's 2 weeks out, say it's a month out, and then I can buy, sell, trade those options contracts in order to generate more cash into my portfolio, because the volatility is crazy, right? We're looking at an 8.7% day just on Friday. Not really on anything other than there's a lot of volatility in semiconductors in the Nasdaq and the tech sector. But we have seen this for a while now, right? We're seeing this thing come up to 1,079, drop down to 800, go up to 995, drop down. And then we're up to 1,087. And then we kind of creep back down to 1,020. And then later that week, it's at 1,133. And now after hours, it's up to 1,151. And this is just in a month, right? We were looking at this thing at 762 just a month ago. So the fact that we're at 1133 is absolutely insane. I remember telling you I was writing $750 calls on this thing, in May. It was that close. It was just last month that we were looking at this. So this is what I'm thinking. I think if we get a beat and raise, this thing comes down, I want to position myself in order to make some more money off of the option when this thing potentially drops. If it drops down and then we start seeing that volatility come right back in and it shoots past 1,100, I'm going to sell or close that options contract in order to lock in my gains, right? That's just what I'm thinking I'm going to do. But let me know what you guys are thinking, right? So that's my 2 cents on what we do with Micron, why it still has pricing power, why I still want to be buying it, and what I'm potentially going to be doing here with it. Up next, SpaceX. I've got to sneeze. I can feel it. I really can. I know it's there. SpaceX. Why SpaceX, guys? There's a lot of things here. I think the big blockbuster thing is that Elon Musk is at the helm. I think you take anyone else, and I think that SpaceX just does not have the same weight. I don't think that people are nearly as interested. I think Starlink is the revenue generator for them now, and we're going to see where Musk takes this thing. I think that is the big, I guess, $1 trillion conversation we're having here. It's already at $2.4 trillion. I guess we're 6 days into this thing now, or whatever we are at this point. We are not long into this stock, and it's already worth 2.4 trillion. So why would I buy this? Where is this thing going to go? What is the long-term play, right? That is the big talk. So when we're looking at this, yeah, you do have a premium valuation, right? I've seen people say that, hey, I took everything that I own and I bought SpaceX at 211. I'm like, that is absolutely insane to me. I don't know why you would do that. And this particular person was 350, 400 grand of their retirement, and they put it all into SpaceX. I would never once tell you to do that. I'm not saying to do that. I'm not your financial advisor. Do your own thing. But man, that is just not my lane to do. So yeah, there's a lot of different things here to unravel. But yeah, I mean, the bull case, right? They are going to be the leader in this space, right? There's no one else that is capable of doing all of what they're doing and kind of putting it all into one package, right? So you're getting Starlink. You're looking at Elon talking about putting data centers in space. You're looking at satellites. You're looking at, I think XAI was rolled right into the company. You're looking at a lot of different things. So if we can have reusable rockets, that is another thing that no one else is doing. That I'm sure someone else could figure it out. I can't figure it out. Sometimes I can't get Zoom to work. So I'm not the guy for getting rockets into space and then reusing them. But nonetheless, right, we're looking at a mastermind of all these different things, or at least a visionary, right? I don't know that he knows all of it, but I think that he knows enough to get the right people involved to be able to even stand a chance. And kind of putting it all into this one thing, right? Like the Boring Company in, I guess they're in Vegas, that made the tunnels for the Teslas. The fact that he's putting robotics everywhere, full self-drive, he's got the people for that. But now we're almost seeing a lot of that stuff kind of transitioning to what can we do with this to colonize Mars? What can we do with all of this to have everyone in all these different areas have internet? Now we're looking at the Starlink being the cash machine that does basically fund all of this other stuff that he's trying to do. So the fact of the matter is, without Elon, I don't think that this is any kind of news. I think that people are buying it from the standpoint that Elon has a plan, and I think he's going to find a way to execute on this plan. So there's a lot of different things here. The fact of what they're doing to data centers, the fact that SpaceX is repositioning itself as this AI powerhouse, as we're looking at here, Colossus. We're looking at all these different things. The fact that we're making or they're securing monumental cloud capacity contracts with Anthropic, with Google. You're looking at $45 billion with Anthropic, $30 billion with Google Cloud. Yes, huge, highly visible, high margin, recurring enterprise software revenue to the balance sheet. They are doing a lot of things well. There are a lot of risks, right? It is a premium valuation. I don't know that it's worth 2 to 2.5 trillion right now. I think, 10 years out, maybe we can start to see like what is actually going to shape here. I do think that Elon has that gene where he's just going to overpromise and eventually deliver. I think it's definitely in the plan. I don't know how quickly a lot of this comes to fruition. I really don't. Um, Hopefully sooner than later for all the investors that are putting in their whole life savings into a SpaceX IPO. And do I think it'd be cool in 30 years to say, hey, kids, yeah, I bought you 20 shares of SpaceX back when it was worth only 2.4 trillion and now it's worth 12 trillion or 20 trillion or whatever it is in 20, 30 years. That'd be kind of cool to say you were in at the jump. But does that make it good investing advice? No, I don't think that it does, right? So just because it's new, just because it's a shiny thing that everyone wants, I don't know that it ever makes sense to buy it just because of that. But I do think you get that visionary that wants to put a whole package together that can put things in space, that can do all the different things that Musk is looking to do with this technology, with reusable rockets, with data centers, with AI, with Starlink, with all the robotics that he's using in Tesla. I think all of that starts to build data centers in Mars or in space or whatever they're trying to do, right? I think it is more of a cohesive, what if we get this, and this all to work together in a new thing? I think it could have that potential to be one of the largest technologies or industrial revolution of space, essentially. So that kind of thing does excite a lot of people, and I understand that. But just be careful. I mean, do what you want to do, but I can't see or I can't tell you, nor would I tell you to ever go all in on any one thing. So that is my 2 cents there. We're gonna take a look at Adobe. Oh man, Adobe's had a rough run here. Is it time to buy this thing? Oh man, I don't know. I still don't know. I want to say that the numbers make sense more and more. We are at a yearly low. We are looking at a stock that's almost been cut in half from last July. 392.58 July 1st last year. We're sitting at 195.16 as of close of business on Thursday. Analysts are probably going to say that we have 70-80% of upside. I did not look. I'm just guessing. Only 31% here. I'm going to have to take a look at Refinitiv and see what they say there. So yeah, they're saying about 257.59. We have lost a CFO. We are concerned about software as a service. That is hurting them. AI is hurting them. A lot of different things are just not going their way. I think the CEO might be out. I'd have to check on that. I think there's a change there as well. But the CEO or CFO is going to Marvell Technologies, the one that I mentioned at the beginning that Jensen Huang of Nvidia said, hey, that is going to be $1 trillion company. So I was looking at that as well, right? So there's a lot of different things here that just point to so much pain. This, on the surface, the company is not doing as bad as this stock price really shows itself, I don't believe. I do want to pull up some stuff here. Let's see if we can get a Refinitiv report. I think I might already have it open. And I do. Look at me being proactive. That's crazy. We've got Adobe here, right? This is what we're looking at. So price target here, 42% higher. We are looking at a stock that had positive earnings surprise, not much, 2.4%, but it did beat. But all of these quarters are very close, right? It's not like we're looking at going from a 3% gain to now we're minus 40, right? So the EPS was slightly lower than it was in the March quarter, 5.96 versus 6.06, but that does increase from the previous 4 quarters. So we're looking at annual revenue going up 11% in 26 and 21% in 27. They are leaning into AI more. There are more agents, AI agents that are going to be into the Adobe software. There is more AI wrapped into the tools so people can get things done faster. So if you are a creator, I still think that, hey, yeah, this could definitely help you. I think that AI, if you sign on for Adobe, yes, you can probably make your Photoshop quicker, or your editing quicker, or whatever else that they are, lending their AI services to. I think it's going to be more intuitive. I think it's going to be quicker, and I do think that that is kind of being overlooked. I think a lot of people are just like, oh well, ChatGPT, Anthropic, Claude, Grok. Look at all these; they're doing all this. Why do I need Adobe, right? But we also said that when it came to Google search, right? Everyone was worried about ChatGPT taking over Google search, and Google's doing just fine. I mean, Google also had a lot of great investments, and they've got a lot of different things that maybe Adobe doesn't. But I think people tend to overreact. So I think that this stock price is coming down for a lot of different fears, a lot of different management changes, and a lot of unknowns. But when you're looking at it, you're also getting Adobe at a 7.9 forward PE, which is a 70% discount to the 5-year average of a 26.2. So on that metric, very, very cheap. If we're looking at my PEG ratio, which we tend to look at very frequently around here, we're looking at a 0.6. So that is a third of their 5-year average, which is a 1.8. So if you are looking to buy this thing, yes, it's got double-digit revenue growth for the next 2 years we're looking at. The PEG ratio is silly cheap. The forward PE is crazy cheap. I mean, I can only imagine 3 years ago if people were looking at Adobe and saying, hey, it's a 7.9, they would have been buying it left and right. So those things all look good. I still just don't know where this trend ends or when the trend flips and we start to say, hey, Adobe is making it work. Their software as a service, they are leaning into AI well. They're doing a lot of things in a great manner that is going to get us paid, right? That is the ultimate concern. Is it growing? Do they have options for new growth? How are they going to be on top of the field, right? So earnings per share. We're looking at a company that finished 25 at 20.94. We're looking at roughly, that's probably about a 20-ish% gain from 2025 to an average earnings per share to 24.35 for 2026. And then for 2027, we're going up another $3 and call it 12 cents to 27.47. So it's not just stagnant. It is growing. The earnings is growing. The revenue is growing. It is ridiculously cheap. For those reasons, I would like to buy some of this stock. Could it go lower? Yeah, but at some point, all of this bad news just starts getting baked in. Yes, we lost the CFO. Yes, AI is out there. All of this is just piling up, and at some point, it's got to start flipping because they have a lot of good things going on in the company other than just simply what the news says, right? And the news looks bad. The news of losing these people, having all this competition is not good for them. But if they can continue to execute, if they can continue to turn in quarters that are beating with EPS that is increasing at a 10% clip and revenues that are increasing 11% per year, that's not that bad. And it is ridiculously cheap. I mean, you're paying like bank prices for Adobe, which is a great technology company, and you're getting a discount on it. So I almost feel like it's worth the risk for a long-term play. I don't know that I would want to buy leaps or long-term options on this because I don't know how long it's going to take. I don't want to go that heavy in it because I'm not sure of where this goes. I kind of just want to tip my toe in the water and kind of see what's up, right? That's kind of where I'm at right now. Is it feels like it should do better than what it's doing. But man, it can't seem to gain any traction with any of this news. But I mean, you look at a lot of other companies and they're in the same boat, right? I'm looking at Celsius. I'm trying to see how this one starts to turn around. I do want to buy a lot more Celsius, and there is a lot of short interest on it, and I think that is continually pulling this stock down. I'm getting there, guys. I'm pulling it up. Celsius at $30.88 after hours. We are coming out of some of these lower prices. We got down to 27.47 on June 4th. So we're up, I call it 10% from some of those lows. Yeah, we came down from 66 at the beginning of the year on the Investing Challenge cheat sheet. It was at $48.13. I still really like this. I think we have a lot of expansion into Europe. I think a lot of the other, shipping with Pepsi, Alani, all the different things that are going on here. I really think that this could be a solid company to purchase for long term, right? So I do want to take a look here and just see where Refinitiv says we are on this thing. I'm going to share this one here. We are a buy. 1 year returns are not great. And again, this one is down. I know that. And that's one of the reasons I'm buying Celsius is because I do have a higher conviction. AI is not taking over drinks. I mean, AI might be able to make robots that make drinks, but it isn't a drink. So we've got a 5 year return of 41%. You look at Monster, you look at Red Bull, you hope that Celsius can kind of repeat what's already been time tested a little bit here. Insider trading, it's a 10, so insiders look like they're buying this. Yes, there's some risk. We talked about that. Valuation, it's, I mean, for some companies it might be a little bit high, but on a trailing PE metric at a 71, it is. Forward PE at an 18, I'm not so concerned with that. I'm looking at Sam here, Boston Beer Company, and it's trading at an 18. And then Scotland enters the chat into the World Cup in Boston, and they have effectively, for each game, they have purchased 3 times the amount of alcohol or beer that Boston actually sells for each St. Patrick's Day. So they are spending 3 times that amount, and they are buying the town out of beer. So some of these other companies, they might have some blockbuster quarters from some of this. I don't know that it's going to have staying power, but it's going to have some strong numbers coming up in the short term. So again, Celsius at an 18, I like it, but off of that trailing PE at a 71, yes, that valuation looks a little bit scary. 3 broker upgrades, 99% of upside here. So I am stronger here than I would be on Adobe. Celsius versus Adobe, I would buy Celsius, more of it. And that's not to say that I don't want a little bit of exposure to Adobe, but I would like to have a much larger portion of my portfolio into Celsius right now. So that's what I'm looking at there, right? But then you see some of these numbers, right? You look at the earnings surprises. You go back to 25, the February quarter, and it was a minus 201%. And then you go 2 quarters forward, and it was a surprise 100% higher. So that was coming off of a negative earnings. And then we got to 47 cents in the August quarter in 25. And now we're at 41 cents in May of 26, right? So there's a lot of different things that happen there. There's a lot of different expenditures and how much earnings they actually get, and the fact that they're purchasing other companies. There's a lot of things that are going to affect these numbers. Annual revenue, right? We're looking at a 32% gain for 2026 and 45.8% by the end of 27. So the revenue is trending the right way in a good, nice growth fashion here. We've got a lot of different things going in favor for the company. The expansion is, going well. I'm ready for them to get more into Europe and other emerging, markets for them. We're looking at a company that is trading at an 18 times forward PE. So coming off of a 5-year average of a 68.7, 74% discount. Do I think it's going to be worth a 68 anytime again? No, I don't know that it ever is. I don't know that any established company that isn't in tech is going to really pull those numbers. At the end of the day, if it's a drink company, it can definitely have some great numbers, but I don't expect anything of a 70 times forward PE to be the normal for an established drink company. We've got forward peg ratio of a 1.1. Again, good forward PE, nice growth rate, fairly even. To me, that's a buy, right? It's cheaper than the S&P 500, cheaper than other stocks in the index, with better growth than a lot of the other stocks that were at the top of this page, whether it's Sam Adams or Coca-Cola or whoever else. They have better growth. So this would be where I would want to park my money in that space because of the fact that they have the growth. The PEs come way down. They had some expenditures. They aren't really forecasting for some of the stock price isn't really forecasting in some of the growth of going into other countries, other continents, and that is definitely a spot where I would like to be. So I'm going to be adding Adobe. I'm going to be adding a share of Adobe, and I'm going to be adding Celsius this week. I'm going to be buying 200 of each. So we're going to say 200 ADBE and 200 of CELH. That's the investing challenge purchase for this week. We're going to keep on going. I'm going to keep on writing these covered calls on Micron. I told you what I'm doing there. I'd like to buy some more Bitcoin. I'd like to nibble at Adobe. I'm not too sure there. SpaceX, I'm looking for this thing to get down to the low 100s before I'm buying. So 180 is not my price point. I had a limit order at 105. I canceled it because of some different covered calls where I needed to close those. I had to basically cancel that order in order to have enough cash to buy my covered call back at a discount. So I did that. I've been buying a couple different things here and there. I've been buying some more Meta. Meta went down. I was buying that. So META got down into the 570 range. I think I bought some at like 580. Yeah, we're still at 574. I think I bought some at 590. I told you guys I'm trying to buy this anytime it's under 600. And I'm trying to remember why it was going down so much. Let's ask Gemini. And let me see if I can just pull this up here. Let's share this tab instead. Yeah, Marvell lost or they got the new CEO from Adobe. So Meta stock down this week. There we go. Let's see this. Platform outages, technical glitches between Facebook Messenger, WhatsApp, app bugs. I did see some of this. I didn't really have much outages on my end. We're still worried about the massive capex. Like I told you guys earlier, Micron makes the money right away. Someone like Meta that is buying all the AI chips, they have to see it actually come to fruition and make money off of the $145 billion that they're spending. So Nvidia can pass on that 40% cost raise to a company like Meta, but Meta gets hurt because they have to spend more and they're not making the revenue from it right away. So I still am betting on Meta long term. Anytime it goes under 600, I think it is a deal. That's where I'm at, right? So I just want to go back to this real quick and see where is Refinitiv on this and see where we're at. Forward PE is an 18. Again, I like that on a tech company. The trailing PE is a 21. We've got, again, the stock that's down on the 1 year, and I'm okay with that. I don't like to see it forever, but sometimes that happens, right? So we want to focus on the ones that we can build the position while they are down. I don't want to be chasing Micron at 1100. I told you guys to buy that at 100, right? So I don't want to be buying it now at so much at 1100. I'm trading those options to get some more cash out of it because it's volatile, and it kind of makes sense to me right here. But we have 42% of upside on Meta. Average price being 824. I mean, anytime I can get this thing under 600, it makes sense to me in order to purchase this thing. Peg ratio, just out of curiosity. I mean, and again, annual revenue 25% up. this year and next year. I mean, it's not slowing down, guys. I mean, it's a solid company, and it's got a couple things that are, hiccups right now. But we've seen capex in Meta before. It didn't slow them down then. I mean, it slowed the stock shortly, but then it rebounded heavy. So I think that's probably in the position that we're in again this time. So 13% discount on forward PE. I'm guessing the PEG ratio is pretty low because we still have decent growth. It's at a 1, which I love, right? So Meta, love it. Celsius, buying it. Adobe, I'm dipping my toe in. That's what I got going on this week, guys. Hopefully this caught you guys up on a lot of different things with IPOs, with Micron, with SpaceX, with Adobe, with Celsius. Didn't really get into SoFi. Still would love to add some more SoFi. But yeah, that's what I got here. So thank you guys very much for stopping by. And please make sure you like, subscribe, and share. I definitely do appreciate it. And it helps the podcast get some growth, get some traction, get some wheels on the ground. And I really appreciate it. So thank you guys, and I'll catch you in the next one. Take care.